We do have here oil coming to the downside as expected, waiting for that break. Gold as well to the downside, waiting for that break. And also New Zealand waiting for the break of this range. We've got our parameters set. We're just waiting, patiently waiting, as is mostly the case. Welcome to today's midweek analysis. We are just going to go over what is happening this week and just giving you a quick update for Wednesday and to help you along with Thursday and Friday's trading price action. What do we have right now developing in our shortlist? Here's our shortlist here with our biases. Let's have a look through this list and what we've got remaining. Here's the economic calendar. Today, a few more dollar news. We also have a Euro speech in New York. Watching out for dollar and euro. Thursday, we've got Aussie news. Let's watch out for that. That's for the Aussie New Zealand. We have more dollar news and another euro speech. So again, dollar and euro in the focus. And Friday, pound focus. We've got euro again and some minor dollar news. As you can see, this is where the most likely volatility is. So we've got, again, euro, dollar, Aussie, a little bit of pound, but we don't have any pound pairs on our shortlist this week. So let's look at the dollar index a little bit closer. Here we are having this retracement after this high was created. And now we can see that we have headed higher. The question is, are we going to get this reversal on this area or are we going to continue higher? So far, we've run through this area. And the question is, are we going to respect this area, bounce off this area and come down? If we don't, then we'll look for the buy scenario if we break. Once again, nothing yet of interest. Dollar is at this point, at this junction, where it is going to make a decision. So if we're going to turn around, then we want to see a nice bearish candle. And if we don't, then continuing higher. So far, no price action to tell us either way which way it wants to go. Let's have a look then at our pairs at our shortlist. Here's what we marked out on euro. We were looking at either this level, scenario A, which is poke higher, come down. Scenario B was the poke lower and move up, which is kind of what we are developing here, possibly. And then if we break through the levels, we've got a third situation now. We're going to look at scenario C. So this will be C. And scenario A is no longer really relevant because we moved lower first. So let's just get rid of that. And we're left with B. Now, how are we going to play this? The thing is that, as you just saw, dollar index unclear. We don't know yet if it will go higher, break higher. If it does, then we expect this low to be broken. We have this reference point and this reference point above. Whichever one we take first, that will be the bias. So far, we're still quite a distance away. We're about 150 pips away. So scenario B still possible, scenario C still possible. The way we want to approach this is, if I just delete that, is past this to see the market go past this key level of 1.1. Let's just draw that. And then once we go past this level, a pullback and then continuing to the upside will be the likely scenario. That's after a reversal somewhere along this area. If we don't get that, we get a breakdown, no reversal, continuing down, then we're looking at scenario C, in which case break of this low will perhaps create some kind of area to the downside down here. And then we'll look for an entry sell. The next targets after that will be, of course, the next obvious ones, which will be down here. And the next one will be this obvious low. Again, I'm going to wait. We are still not quite clear about where we're going. It looks like an uptrend at the moment. However, we are breaking lows. I don't know if this is a type of head and shoulders pattern, if you trade these kind of patterns, but either way, we'll have to wait and see. We have our levels marked out. Let's now move on to the next pair. So the next one on the list is CAD Yen. As you can see, not playing along. So far, we're going higher. It seems that we're going to actually go higher on CAD Yen and break this validation, and the bias will be to the upside. However, just like with the euro, we have our breaking points marked out, validation here, the low here. It has not broken either. Follow along. The market so far is just telling us it wants to go higher. Not, I'm just sitting on the sidelines myself, and it seems that we're going to break higher. Of course, you could say that there was an opportunity on this level down here. However, I wasn't so sure because I didn't know whether this was a turnaround or not this high. Yeah, as you can see, we could have gone lower with this swing being created, but we ended up going higher. The potential, the probability was not there, and therefore there was no action to take. Neither of these levels, neither part of the plan was actually was in play. So we'll leave it at that. Euro yen is a similar picture to CAD yen. We're expecting a reversal of this area. We didn't have that. We did not get that break. Instead, the market has reached higher and higher it goes. And we've got another invalidation here. Once again, nothing to do here unless we have a break. So the next structural break, our next swing would be this right here. So we don't need this. This is still the idea. And let's see, I mean, until we actually have a proper market break of this level, going to wait and see what the market does. Patience game, this is January, as I was saying before, and just have to let it be. For now, we stick with it. The next levels will be target 1, target 2, and target 3. Right now, not going against this uptrend and waiting to see what the market will do. Let's have a quick look on the weekly. So far, the weekly is ripping higher and higher. So we'll wait for some kind of sign of either reversal or let it continue higher and do its thing, and then we reassess. No good so far. Right, next one on the list is EuroCAD. This is EuroCAD on the weekly. We were looking at this range, as you may remember, thinking about this possible breakout and some kind of better price to continue higher. Or the other possibility is the downside and then continue higher because of the bullish bias. Now, there's also a third scenario. So let's call this scenario A. Let's call this B. And let's call the third scenario, which is, I will show you now, scenario C. So what can tend to happen is the market may just about break through, create a fake out. You may have heard of that term, a fake out of this range, not close above, not give us a strong price action, and actually reverse to the downside. So that is actually scenario C. So I'm prepared for that to happen as well, because if we don't get a clear breakout, which is scenario A, meaning big bullish daily candles, ideally 2 closes above happening, and then a retracement. If that doesn't happen, then looking at scenario C, if we go higher into the top of this range, bounce back off the top of the range, and then come down back to bottom of the range. So this is usually what happens with ranges, this ping pong situation, higher, lower, and we trade the range. So that's scenario C. Well, let's see if it does actually poke above, it does create a swing. And if it does create a swing, then of course, what happens is we want to see some kind of structure being broken, some significant low being broken, and then coming to the downside, making use of this possible trend line break, whatever happens, and then heading lower. Now, if none of those happen and we're still in the range, then we're still in the range. The longer the market ranges, the bigger the potential move will be when it does happen, and then we have to capitalize on the move as it unfolds. So far, we wait and see which one of these 3 is going to be happening. Of course, possibility D is that it continues to range and neither of this happens, and we either just get a straight drop or a straight rise. So far, it's not clear. But seeing as we have not yet reached into the 61.8 level, as you can see here, we're still kind of dilly-dallying halfway, then really would prefer the cheaper, much cheaper price on the higher time frame. If you can see on the weekly here, this whole retracement, and then seeing what we will have. Again, we've got Euro news that may help things along that we've got today, tomorrow, and we'll see how it lands out. Aussie New Zealand, you may remember this one. We are ranging. We were looking at the break higher, and for this to happen, nothing like that yet. Let's look at the lower time frame. Let's see if we get another little drop lower and then continuing higher. So the other possible scenario is one more go at the lows and then heading higher. So that's another possibility. We also have, if you want to call it, a bit of a trend line developing here. Let's see what happens. The trend line is not important. What's important is the price action, is the momentum, the price action, the force of the move. Really a nice big move, kind of like this candle here, or this kind of big candle here like this, or indeed one like this. Let's wait for that. We've got Aussie news in Asia session tomorrow, Thursday. I'm gonna anticipate that London session and New York session tomorrow may be a bit more clear, a bit more interesting. If you like this video, click the like button and subscribe. You'll receive these often, 3 times a week, and you can follow along. Okay, moving on now to gold. What do we have on gold? Well, gold, another one that we planned out scenarios, just like with the euro. We had the high looking for a break and the low looking for a break. What do we see now? We see these lows being created. We've got 1, 2, 3, 4 very clear lows, which means that if we are looking for the downside, a clearing of these lows should create a momentum to the downside. There's also a little bit of a trend line here if you want to look at that. And so far we are within this range. So nothing really to see here until we have clear price action. Let's look on the weekly. So here's the weekly, kind of indecisive. It looks weak. The candles are not showing any bullishness. This was indecisive, and we're kind of heading lower and lower, possibly looking to break this low and the low of last week, and then more downside. Back to the daily, and here we have a possible swing, possibly you're heading lower. However, don't want to be really taking the chances here. Gold is a bit funny, a bit unpredictable. We are stuck in a range. So a clear break lower would be fantastic. So we're waiting for that. Once again, pairing it with the dollar, waiting for the dollar to do its thing. So this market, gold heading lower, breaking these lows, and gold breaking its highs, the invalidation highs that we marked out. If you want to go back and check it out. Let's go back. Here you go. Here's the dollar. Here's these highs. A break of these and a break on gold would be the optimal scenario. If they do different things, then it becomes lower probability. So we want to match that, correlate those up, and then we have a stronger idea. And the idea is, of course, this moving to the downside, better price, and continuing lower. If we get the high prices taken out on this significant high, this big high, then we're going to reassess. Okay, last but not least, oil. Again, oil is a range. All the markets are ranging, and such is basically such is the market, such as January. So we let that be, and let's look at oil. Oil again, similar to gold. We have a bit of a trend line. We have the market moving further down, and we still, even though it is moving down, showing those signs, we still want a break of this last significant low, which would mean that we are breaking multiple structures to the downside here, last week's low, the week before that, and this major low down here, which is, let me just check it out. It's the low of the previous 6-month candle. So very significant low to take into account. And the last 3-month candle as well. Let's look at the 1 month. Here's the 1 month again. And here's that low of the previous month. So again, a break of that low signify lower prices. Okay, so for now, still nothing to do. I mean, you could jump on this break of structure, a break in the market. However, for me, I'm looking at this whole thing as a range, and personally don't really want to be involved. It's a lower probability. It's possible. The probabilities are showing the downside. However, overall, it's not as high a probability as I personally would prefer. So therefore, I'm waiting, and it may very likely be that this week, again, will not yield any entries, any signals, and therefore we'll have to be patient again. But such is the market. It is a test of patience, a test of waiting. Waiting itself is a skill. So if you don't know how to wait, I suggest you go about learning how to do that. What is waiting in trading? Okay, that is it for this week, and sorry, for today, I should say. And for now, keeping an eye on the news today. Let's see how tomorrow unfolds as well, and it may be a bit clearer. That's it for this video, midweek analysis. Thanks for watching, and I'll see you on the next one. Bye for now.